All right, hello everyone. So today is Thursday. I've got gold in front of me now. As you know, we got all the astro hours and the trading hours and the days and so on. Right. So this is gold. I just placed a trade on this, and it's about to get covered. The second position's take profit is up there. We'll see how that pans out. It's a good thing actually I'm doing the video while I've just entered that here. As you can see, that's the hour. This is the next bar. So I entered it, very tight stop loss. The trade will be covered here with more than 1-to-1. The trend is going up still, and we've got room to go up more. Like yesterday, I did say the trend's going up. So if the market pulls back, going back up again is okay. And we've got news coming up. Right, so just want you to make a few notes about the news. Today we've got a bunch of hours, and this was the earlier Asia hours. So from here, we've got, as you can see, if you've taken timing from me, you understand where the disruption and where the, action's going to happen, right? Where we're going to have an act or a flow. Okay, so where we're having something that's enhancing or something that's going to be like, making a change. All right, somewhere like where the buck stops kind of thing. So you already know those. Now, when I'm giving the hours, I can't detail it all out in writing. So this is why I just give out the hours. But most of you have taken the timing course, so you understand. Okay, so this hour, as you can see, it was an action time. All right, and from here, the market, as you can see, if you made a list of your timings, you should see that there's a flow happening. All right. Now, if that flow continues, we should end up somewhere where we're going to have some action later on with the news. All right. So we're going to have to see how that pans out. Right. Now, news time today is important. Okay. If this is relevant, if this level is relevant, okay, and if this level holds, we shouldn't see a change in the market at least until 10:15 my time, which is pretty much 3 hours away, okay? So we're either going to stick it around here or muck around here. This is why covering the trade, with your first stop loss, covering the trade and then letting the rest of the trade ride is not a bad idea at all. Okay. And then what you have to look out for is this. Now, because we've got news, let's check it out. And the reason I'm reiterating this and underlining it is because it's going to be important. Because the setup is before news. Okay, so let me just sign in here. Sign in. The setup is going to be before the news, and it's going to be way before the news, right? The news is coming out at 4:30, and then we've got Trump speaking at 7. Now, when he's going to talk at 7, the market should already be moving by then. All right? And then there's some, I'm going to use like astrological terms here, okay? But what happens is it's going to be sexy, all right? So he's going to put people into a sexy mood. So it should be like, it should be like a sexy thing, all right? And this is how things are looking. And then that should push the market wherever it's going to go once it finds direction, okay? It should keep pushing until that 10 past 10 to 11:48, 11:50. All right, pretty much closing, okay? But he's going to communicate, and his communication is going to be like, stern, aggressive, powerful, okay? It's going to be powerful. So that's going to kind of like push things forward and move things forward a little bit, all right? And that's how we should, just treat the situation. Now, that means we're going to have volatility, because if you take a look at your 10 past 6, Okay, you can see there's volatility there. You can see there's volatility at 8:25. Okay, so, and then you can see we're going to have some volatility around 10 o'clock and then the push all the way in. So if we find a direction, and if the market finds that direction, if we hang into it, it should kind of like flow and push us all the way through. All right. So I hope that makes sense. I mean, if you've taken timing from me, it should make sense, you know, because like we're kind of like, you know, writing out the scenario here. Now, it's an impulse wave up and we've got a rectangle. Okay, you can see a rectangle, or you can also say, well, we've got an A, B, C down, and so on. The stops have been swept. This just took out the first take profit. Now, the rest of the trade is just free. I'm just going to let this go now, okay? And I don't need to take a look at it actually until 11:50 or 1:30, all right? And it's like 7:20. So if it goes in our direction, great. It's a free trade. And on the daily with gold, okay, remember I've talked about this zone and the gap here. And remember this, I said this could be a push up, and it's logical that we could also break this due to this gap here, and that's what the market did. So initially, this was a swing day. This was also a swing day, swing or a breakout day. It's going to be one or the other, remember, with the swing days. And then the market's pushing up. Now here, now you can understand why covering a trade at the right time is important. Because look, PST yesterday was slightly lower. Today it's 67. That's 2,744. Now that level I've marked in now, and you should too, 2,744. Why? Because this is the place where the market broke out. Okay, so coming back down, doing a goodbye kiss, stop sweeping to go back up is still doable. The market can still do that. So the market can come up here or stick around here and then push down, stop sweep, and then go up as well. So having the time and the price is obviously for us relevant. Now on the daily also, you will see that we've got this level, which is 2,724. That hasn't changed from yesterday. That is still the same place. Okay, 2,724. Well, just rounded up to 2,725, but this is it, you know, 2,724. All right, let's be a bit more precise. So that's zone as well. Why? Because they're both good buy kisses, one on the PST, one on the price, and we're okay with that. Okay, so if it comes back down, looking to get back into the game to push it up is okay. But if the market does not come back and it keeps pushing up, okay, then sooner or later we're going to get a slap down, right? They're going to slap it down, and that should happen around here if that is going to be the case because of the big major fall here, okay? And then we've got, like, you know, market retracing, filling in the gap, and then a sell-off again due to this sell-off here. Now gold has room to go up, okay, because the world is unstable. So it still has room to go up, and we don't mind. But because we're short-term traders, our approach to the situation is in waves, okay? And this 67 here, as you can see, 67 is 2,777.95, which is, which is where I put the take profit, which is also the place, 2,707, where the gap is closed and you tap into the supply zone. Right? So it makes sense, but this is also a good sell zone, especially if it doesn't come back, because we go up, we come into a sell, we close the gaps, then we look for a buy again. All right, so that's how we can work on it. So that's a bit of a longer perspective, but today really need to be careful with this Trump chit chat, and we can see volatility happening. Let's take a look at the euro dollar. Now, euro dollar, yesterday I posted about the euro dollar, and I said this is a bit of a tricky situation because there was a lot of conflict. I got stopped out here. Okay, you can see I was stopped out. I was actually sleeping when I got stopped out, but the stop loss was there. It was tight. Okay, and it's okay to do so because same in this gold situation with a stop loss so tight, it's just you're just not bothered. There's a $2.50 stop loss on this. $2.50 stop loss on gold is tight. Okay. And if I was like really, really scared about that as well, you can still move it up a little bit as well. But you want to give the trade a bit of a breathing space as well, because it does go up and down, like on the euro dollar example as well. So with the euro dollar, let's take a look. This is a good retracement, but this has got room to go still up. And look where the market took off, exactly at a PST level. Look, 55, if you're using your ATAM, just check it out every day. 1.0399. This is what I'm talking about, price and time. Look, 1.0399 trading hour, and the market takes off from here. And this is the next trading hour, and it's just building up on that. Anyone who bought here, your stop loss is just going to be tight. It's just going to be tight. Okay. If you wanted to wait for this and see how things are going, because this is an opening closing price zone, that's fair enough as well. Okay. But at the end of the day, if you're getting in here, then obviously your stop loss is going to be just under there. But this is also okay. So having a PST, even if it's not, exactly at a trading hour, it's good if you got your direction. And this is the direction. Okay. So let's carry on with that. Okay. And because I got stopped out here, I am not ticked off and I am not upset. It was a tight stop loss. I knew the market's direction was up. We didn't do anything wrong. We went in right time. That's the right time there. This is the right place. And then it didn't get stopped out until this happened in the closing. And that's okay. All right. This is going to happen. But a small stop loss is not a problem. And a small loss is not a problem because we're going to recuperate that now much more. All right. And also, look, if you're going to enter a trade, you got the daily and now you got the 15 minutes. See how that divergence is telling us, listen, we got to go. So the market comes down into the PST level. It's just logical for the market to come up. And if you enter here, let's say you entered on this bar or here even, okay, right on the 0399, your stop loss initially would have been here because you got no reference. If you entered here, you still would need to be under the previous day low, okay, and that's just how it is. All right, and fair enough, right? So if we're here and the market mucks around here a little bit and we're still around here, then this can still push up from here as well. If it does, your stop loss needs to be around here. Now, because we're expecting some turbulence, all right, you have to just make sure you're entering at the right time, right place. Okay, and that's how it is. With the euro dollar, my expectation is still this zone. All right, because this is where they sold heavy, no gaps here, slight gap here. So this is where they sold heavy. So coming into this zone, for me, I think is a target zone. It's logical. Buying on the low at that PST level is fine. Okay. Now, if you've missed the PST level, okay, you might have because not everybody's using ATAM. What you can do is then wait for the market to either break above the daily pivot and pull back into a trading hour, or pull back into a trading hour here, opening or closing, or if it pulls back even more here, does a stop sweep, you can. Those are the options available, all right? Because sometimes the market will come to a stop sweep and then go up. That's a good move, Okay, and this is how we entered it the day before yesterday. Remember, on the SP 500, which I'll show you so you can understand that setup as well. Okay, so that's euro dollar with SP 500. Now, okay, what's this red line, you might be asking? This is the Mars line, all right? So this is a zone where we, as you can see, the market can muck around. It's a volatile zone. What to do? Well, we don't have a swing day on this until tomorrow. So, two things can happen here. He's going to chit-chat, everything's sexy and honky-dory, and then the market, can continue to push up. Okay? That's that. The second thing is, when the market opens, we might have a retracement, okay, and then go up, okay? As you can see, we're already pretty high. And if I do this, so the market's already broken out, okay? Broken out, maybe we'll come a little bit more down and we'll wait for the Trump hours. Now, if you're trading the SP 500, okay, the setup is going to be around, it's 12:30 on the platform, which is 1:30 my time. But like I said, when the news comes out, we're going to be at a place at 10 past 5, which is going to be 10 past 4 on the platform here. Okay, so when this bar is over, we'll see how things pan out. We'll see where we're at. Okay, so you've got to match your technical analysis together with the time as and when that thing happens. Okay, and that's basically it. And let's put the other hours as well for the New York SP 500. Now, once the market makes its move, it should head aggressively. It should go aggressively, okay? From there into 6:15, which is 5:15 here. I don't see the market changing direction then. If it makes a move in a certain direction, it should continue. See what I mean? It should keep pushing. It should continue. And that should be like with Trump talking and everything, the direction should hold until closing. Okay, so 9:15 is okay. If I tighten this up a little bit, this zone is also going to be okay. See what I mean? So this is why, if you get your hours right, you can follow it through, and then you have an understanding between time and price. A lot of people don't know how long to follow it. When you say how long or how far you're going to follow it, in the market, everybody talks about the price. So for us, we've got time. We can manage our trade according to time and price together rather than just one variable, right? So this is why it's important to see how things are going. The market also, if you take a look at the daily here, all right, the market has got room to come into that 59, which is 6,040. So that we've got to put in 6,040 is right here. This is enough to stop sweep everyone. All right. So that's the previous day low there. Stop sweeps everyone. Everybody's stops get taken out. No gaps here. Look, it's all filled out. Okay. The only gap is all the way down here, which I've extended the other day, yesterday I think, and also I've mentioned this zone here as a beginning point. But this we can get rid of now, and I'll tell you why we can get rid of it. Because the market is taken off. Now we can evaluate that on a daily level, which is going to be here. All right. So the market's got room to kind of push down. And if this is going to be a trading hour at this price, then, we might be looking to go long from there, and that's what we should be taking a look at. What does it mean when they do a stop sweep? This is the kind of action you're looking for. Look, dip down and quickly back up. As you know, these were trading hours on Tuesday. Also, this is a beautiful move. And remember, on the SP 500, when I entered here. There was a trading hour here and also here. And why? Because it's a bit far, right? Okay, it is, but it's because the market filled in the gap that we were looking at, right? Now I can get rid of this. This gap is filled. And then all of a sudden, really quickly comes back. So it took out all the stops below this even low level, right? See the even lows? Sweeps them out, pushes in, gently pulls back into the trading hours, and then bang. Okay, and that's it. And then you can follow that through all the way. And if you followed it all the way through, you've done a good job. This is the way to go. Right? That way you can take quite a lot of profit and you don't have to jump in and out of the trade. If you covered the trade as well, for example, on the SP 500, once the market was up here, I took profit, covered the trade, and the stop loss I moved up as well, so it was no problem. Even if New York, messed around, because I did say it's going to be messy here, and it was, you could have waited for this mess to be over, because I said you should, once we find direction, it should go to the closing. It should move towards the highs and the closing, and that's what it did. It should just go towards the closing. If it was slapping down and moving down, then you'd be following it down to the closing. Right? And that's just how it is. So just understanding how this timing and pricing works is just, real magic for all of us. So with Trump having a chit chat and everything, this zone is going to be important. Okay, if it comes down here, and then the market, if it goes back up from here, then you can follow that all the way into closing again. All right. If the market sticks around here and with Trump talking and everything starts to push up, then obviously we're going to have to follow it from here into closing, and tomorrow is going to be a swing day. The thing is, I think I'm just checking here. We've got news on Friday, and then we're going to have news Friday, and then Friday it's going to be good because we're going to have a setup at 4:55. Tomorrow's going to be a good day to trade, because once you get this 4:55 setup tomorrow, okay, then all you got to do is wait for the news to happen, and you can straddle it if you want, and that should push up with the news coming all the way into 8:10 at least, okay? But it doesn't look like the market will change direction at all. It should just keep pushing until 8 or even 11 o'clock. All right, so we'll talk about that tomorrow. Let's take a look at Dow Jones. Now, indices go together, so there's no drama there. All right, and all we have to do is just basically match time and price, the same thing over and over and over again. Rightio. So this is it. Remember on Dow Jones, right? Remember, we had Wednesday, okay, for a swing day, and then the next one is Thursday. So this is Wednesday. So we've got to be careful on the Dow, okay? Wednesday, and then Friday, okay? And NASDAQ and SP 500 are also Friday. So this is going to be like maybe a push up into those days, or we'll see the market will maybe come down, go up, and then come down. So we'll see how things pan out. We don't have to be doing the prediction for anything, like spot on, like exactly, okay? Because we've got time and price, and this is, as you can see, this is a big sell-off zone. So you see the big divergence there, right? Market has gone all the way back up again in momentum, but the price is at PST level. The price is at Fibonacci levels. Okay, so this is already like a zone. This I can get rid of. Okay, this is already a zone. You see on the PST, it's a supply zone, right? So you can also do this. Okay, so this zone is looking logical. If you draw your lines from top to top, it should be all right. Okay, so this zone is also looking like it. So the market's gone up nice and easy. If not, today or tomorrow, the next week is obviously going to be a retracement week. The market should come back. Okay, so we'll take it from there. Here, I'm just going to delete that because let's do this, and let's do 4 to 1. Here we are. So just so that we can see the PST level, right? 62, that's the price of, 65, that's the price of 43925. 43925 is there. And this is pretty much okay for a stop sweep as well. Okay, now here the market didn't come back at all. You see, it's all yesterday is all sideways. So people are waiting for the news and this Trump speech as well. So I'm going to get rid of that. Those targets are done. It's all good on the weekly, and we are here, as you can see. All right, this is, I did say this is a bit of a goodbye kiss zone. Now on the weekly there's a gap. Okay, so how we're going to deal with this? Here 67, we've got 44,401, which is there. So this is still on the cards on the monthly, and if it does come up here, I do not mind shorting it. Okay, we are coming towards the last week of the month, so coming up here could just trigger a kind of a fall as well from this level here. Okay, and that's fine. That's 43,000 for 43. What was it? 44,400. 44,400 is just there. All right. So it's pretty much the 25 zone in this zone here. If it does, so on. But on the daily, we're pretty much clean. Okay. So no gaps there. No there, no there. It's just nice and clean. Let's take a look at NASDAQ. Rightio, NASDAQ. Just like with the SP 500, remember, we had a breakout on the weekly, not standing in front of it, just pushing it up. Okay. And that's basically it. Now with NASDAQ, today's Thursday. Remember we had Monday, Tuesday, and that's your Tuesday. Market comes back. It's a new week, the swing of the week. Tuesday is Monday, Tuesday. So Monday, Tuesday, and going up into the next swing day tomorrow. If you want to buy 55, is a price of 21,509. 21,509. So somewhere around there is going to be 509 there. Right? So if the market dips down, this is nice. Okay? And then going back up, it's doable. All right? This is also a nice setup on the 15-minute. Okay, this is a bit of a tight sandwich zone, as you can see. Not the best place to buy the highs. Okay, so we're going to have to wait for New York. But New York's got a setup, like I said, So if you're trading NASDAQ, these are the prices. This is the price, the zone where you can actually look at trading it if you want to go up. Okay. If you want to sell, you need to wait for tomorrow because tomorrow is the swing day. Okay. And Friday is even a bit tricky because it's the last day of the week. So if we head up high somewhere, Monday is going to be a sell day, right, for a retracement. Okay. But this is very nice and clean up move, closing the gap and then possibly selling again is all on the cards. So we'll cross that bridge when we come to it. Okay. And if you recall, this is the Wednesday from last week, okay, where the market started pushing. And then this is after the inauguration, the Tuesday swing, okay. And now we're going into, now we're going into the Friday, that's the Tuesday, okay. And now we're going to the Friday. Okay, I hope that makes sense. If you just match it to your technical analysis, the swing days and everything just makes sense. All right, let's take a look at Bitcoin. It's really taking the guesswork out because you understand what you have to do. It's just like, okay, it becomes common sense rather than, oh, what's going to happen is going to do this, going to do that. And because you're entering at the price and time together, then it's really no big deal. It's just not a big deal because your stop losses are tight even if you're wrong and blah, blah, blah. Okay, so this is Bitcoin. Now with Bitcoin, now remember Thursday was a swing day and then we had Tuesday swing day as well. So today's Thursday, that's your Wednesday and that's your Tuesday. All right, that's your Monday, Tuesday. So Tuesday market makes a high. And then sells off, and that's your swing day. All right. So now, if today's a swing day with Bitcoin, and Fridays, well, we've got Thursday, Friday, so we should end up somewhere where we can turn around again, and that should be around the 42 zone on a price, which is 96,583 according to the PST. So 96,583 is going to be on the agenda, 96,583. 96,583 is down there. Okay, so that's that. On the weekly, remember we had that good buy kiss 64. 64 is 99,728. 99. Which is pretty much your weekly pivot. Okay, 99,728 is just pretty much there. Okay, 728 is somewhere there. Never mind. All right, well, which actually the market did, you see? This is a trading hour on Tuesday. And Tuesday was a swing day, remember? Market comes down and then just going up. Nice and easy. And then swing day, market Tuesday goes up, it makes the high. Now we're coming into Thursday. So if we're dipping down and down, Thursday, Friday, it's fine, okay? Because then, we can go back up again and you see the gap is going to be closed just around that 37.5. So keep that 96,900 on your cards, okay? But if we're going with the PST, which I do, 96,583 is your closest target after the weekly, if the weekly gets broken. Okay, if it doesn't get broken, don't muck around with it, obviously. Because we've got 2 days, Thursday and Friday, okay? And Trump is a crypto guy. He loves crypto and he's in the crypto business himself, okay? I can't possibly imagine, according to human nature, that he's going to say something bad that will affect crypto badly, okay? So I'm thinking when there's room to come back at the trading hour, buying is a better option during these times, okay? Here, what we have to understand, I said this the other day. Remember, we had a sideways market here, and we had those swing days at the lows. Remember, lows, lows, swing days, where we had lows here, swing days here, pushing up, and swing days at the top, selling as well. So this was a swing day, this was a swing day here, selling. So the market did all that. Now, if you take a look here, we've got a sideways market again, and there's a gap here, and this is pretty much enough to fill the gap, right? So if you've learnt from me, you understand what I'm talking about. Just draw a straight line out. That is it, and that will fill the gap. You see what I mean? All right. So now, sooner or later, because this is going to happen, selling the highs is logical to push down. Okay, then we've got this zone happening. All right, hope that makes sense. So swing days at the highs are okay to take. Swing days at the lows are okay to take because it's a sideways market. And sooner or later, it'll break. And if it does break, you know where we're coming. Just like with this one, sooner or later, it broke out, came back to the goodbye kiss. Then we knew where we were going as well. Why? Because, let's get rid of, it's the same mentality, remember? This is where the market breaks out. You push this out, okay? From there to there, okay? And this push out from here to here, you got 2, that's your initial target. And this also became the goodbye kiss. You see what I mean? So it's just like, it just makes sense if it wants to go further, all right? Okay, so that's the stand. Tuesday being a swing day, Wednesday selling off, Thursday, Friday. If we find ourselves at the low Thursday, Friday, you can push up with it from the lows, okay? Friday, we also have news coming up, so be smart.